hope each and every one of you have been doing fine. And this video that I'm making is just a replica of what I made. I recorded a video yesterday, and I later came to realize that I had not recorded the sound, and I was not able to do it again, like pre-recording and giving out the video as it was. I felt like I was not able to connect with you, and I decided to do it once again. So here again we are back. And I hope you guys have been doing fine, because it's been a minute since we last talked. I've been having issues with my laptop, and I was not able to make any other content for you guys. So let me start off. Let me see. Yeah, I don't know if that will be possible. Yeah, I think it will be. Yeah, now that is nice. So whatever we're doing today, I'll be trying my best to showcase the power of a break block and using an FVG. So what are we talking about today? Today I'll be giving you guys an idea of what it is like to use a break block, but we have to first look at what is liquidity sweep. Okay, not what is liquidity sweep, because this is not a beginner's video. Liquidity sweep. Market structure shift, and breaker blocks. Breaker blocks coupled with an FVG. So I'll be giving you guys an idea of what it is like to use sorry about that. My Yeah, that's more like it. Okay. So I'll be trying to explain. I'll try my level best to explain liquidity sweep, market structure shift, breaker block, coupled with an FVG at uh, at a required position. So looking at GBP USD, that is British pound against the US dollar. So we'll be looking at the price action for this was on Tuesday, 1st of July, and I'll be giving you guys whatever I traded and what I saw and the reason that made me go for the trade. So we first mark out. Whenever you're trading, you first have to mark out your sessions, uh, daily, midnight open, like each and everything. You have to mark out to be able to know, like, what are you targeting, what are you really after, what point is market at and at what time, because price will always respect time, and that is something that you should always live by, because time is the leader of price. Like, price goes with time. Just for an example, looking at the London session, that is when we have setups for currency pairs. Looking at indices, what time does indices like have a lot of volume, or what time does a good setup form on indices? That is the likes of Nasdaq and US 30, S&P 500, things like those. So saying we are marking out. This was previous week high. Let me mark it out. Here we do have what? We do have previous week highs. Previous week high. There we do have previous week highs. And notice from this point we have relatively equal highs. Let me just note it down. And why do I say relatively equal highs? Let me first note it down. Yeah, we do have relatively equal highs. How are you able to identify relatively equal highs? I'll showcase by I don't have a drawing something, but I'll try. Let me do this. We have this. Have this. We have this other high. You can see this is another high, not taken out by the previous, not taken out by the next high. We have this, and we also have this. Ain't all these relatively equal highs? Relatively equal highs. What does relatively equal highs mean? Relatively equal highs means highs that are together and which are trading against a certain area or at a certain zone. And you might want to call it like our resistance point. Okay? So we can say here we do have a lot of resistance. Here we do have a lot of resistance from these points. So these are relatively equal highs. Another thing that I would want you to identify is we are looking at Tuesday's price action and taking it forward to Wednesday's price action. So on Tuesday, we identify session highs. So this was our session high. That is Asian range high and Asian range low high. So first of all, this is our Asian range high and this is our Asian range low. What has happened here towards the open of Tuesday's price action? So towards the open of Tuesday's price action, during the Asian session, we swept. If you look closely, we swept this high, which was a previous day high or previous day high. Then we did not sweep previous daily low. If you look keenly, this was a previous day low. So those are the things that you must identify when you are trading a specific day open or a specific daily open, depending on what you're really looking after. So another thing I was trying to explain what happened here during previous week high. And during this previous week high, we get liquidity sweep. We get a liquidity sweep from a liquidity sweep from a higher time frame key level. So why have I identified it as a higher time frame key level? Because it swept previous week high. This was previous week high, and we are in another week. So we swept previous week high, and price rolled over. So whenever you're looking for a change in markets, so first, have we outlined what is a liquidity sweep is? It's a sweep of a previous session high or a previous key level. Like we have this was a swing high, right? So we swept that swing high and made another new high. So what does it signify? That price is still moving up. So another thing that will help us identify that price has ended the bull run, because if you can look from here, we have been having a bull run, a bull run, a bull run. Somebody else will come and say it like this. Say we have ended the bull run. It depends on your how you trade. Since look at these levels, these levels have been trading, have been trading around this line, making this low, then trading up, making this low, tapping onto this line, and trading up, then came tapped. If you want a bull run, somebody who trades like using lines or whatever you want to call them, will come and say we have tapped here, then we are going up again. So that I'm just trying to explain how will you know that we have ended the bull run. Something that you will come to know if you have ended a bull run is by use of PDRS. Let me add this here. PDRS. What are the type of PDRS? Type of PDRS are fair value gaps, imbalances, um, what else? Yeah, most of them are something like that. So our first PDRA will be when we were moving on a bull run, we created a fair value gap. Let me show you that fair value gap from here. So we created this fair value gap. If you look closely, we created that fair value gap. Wasn't that what we created? So price made a fair value gap. Let me indicate this. This was a 1 hour bullish fair value gap. What has the bullish fair value gap been done? It has been disrespected. If you look closely, we have disrespected this fair value gap. Haven't we rolled over? Sorry about that. Haven't we rolled over and closed below that fair value gap? Haven't we done that? We've done that. Another thing that can help you identify, this was a swing low. Has price closed below this swing low? Yes, it has. Look at this. This was a swing low. Has price closed below that swing low? Let me put this behind so that you guys might be able to see what I'm talking about. Has price closed below this swing low? It has, and it has closed below this swing low. So what does this make us? What does this make it as? We've had a market structure shift, meaning we've broken below a swing low and price has closed below that swing low. So what will this signify? This will signify that we have already changed, we have already had a market structure shift or a change in character or whatever you might want to call it. That we call it what? I don't know any other names, but I'm saying we have already had our market structure shift. After a market structure shift, if you're an ICT student, or depending what type of student you are, you'll always trade ICT. Sorry to say so. And I'm not even sorry to say so, because you all know ICT came up with all this. So, what I'll say, another thing that we have already had a market structure shift. So, somebody else might decide to trade an FVG. What is an FVG? An FVG is a fair value gap. And which FVG will you trade? We say most often we don't trade the first fair value gap. But here I'll be explaining about a breaker block. So where is our breaker block? Here. Don't worry. Be patient with me. I'll explain everything, each question you have. Why have I chosen this breaker block? Why have I used it? So let me just indicate. This is our breaker block. Breaker block coupled by an FVG. Why have I said break a block coupled with an FVG? Somebody will decide to trade a fair value gap, but if we have a break a block, it just tells you that this is a high quality setup. And if it is a high quality setup, what do you do after a high quality setup? You go full margin and then you blow your account. But when you use a break a block and a fair value gap, you'll never blow your account as far as you got your bias correct. So allow me, guys, I know you have a lot of questions. Let me explain the importance of what is a break a block. Allow me to delete that. Okay, why is this not okay? Nice. So, guys, I'll be explaining a breaker. So we have two types of breaker blocks. First, we do have a bullish. We do have a bullish breaker. Bullish breaker. Sorry. Bullish breaker block and a bearish breaker block. So we have two types of breaker blocks. First, what is a breaker block? Sorry, let me get the right words because I have it noted down somewhere. It wouldn't be my joy to give you guys information that is not correct, right? And referring is not weakness. Remember that. And if your girl tells you to refer from your cheating habits, you just tell her she give you a month of cheating. Anyway, so a breaker block. What precisely is a breaker block? So a breaker block, we put in a low. I'll explain with I'll first explain what is a bullish breaker block. A breaker block is the candle that initiates a sweep of a sweep of a sweep of liquidity at a key level, making a new high or a new lower low, and price after making a new lower low. Okay, after making a new lower low, it forms a new higher high. And if it were made a new let me just explain with. So first I'll explain what is a bullish breaker. And what is a bullish breaker? A bullish breaker will always make something like this. A lower low, a higher high, then I'll tap onto that. After I tap onto that, okay. So what is a bullish breaker? A bullish breaker, I've explained, that is the candle that initiate a sweep of a key level, a sweep of a key level. So let me just say that our key level was at number 1. So that was our key level. Haven't we gotten a sweep from this? So here, let me say this was our key level, and price has swept this key level and made a new. We've made a new what? At number 3, we've made a new lower low. At number 3, we've made a new lower low. So this was our first low. Low number 1. So that was our first low at number 1. We made a new low. Then we at number 2, we had a high. Made a new high. We had a high. We had a low, a high, a low. Then we formed another higher high. So meaning we've made a low, a high, a low, a higher high. So what does this make it as? This makes it a what? This makes this level a change in market structure or a market structure shift. Ain't that right? Ain't that right, class? If you're if you at least you're understanding this, kindly let me know down in the comments, and make sure at least you communicate, guys, because you communicating to me is what makes things easier, and it what makes even the videos that I'm able to identify my mistakes. So if you have any questions, please note them down. Please give me something on the comments, and I'll appreciate, and I'll ensure to give you guys something for free and something good. So here, let's say we had a candle. Here we had a candle that initiated. We had a list of candles that initiated the sweep of this low. Key level, liquidity, liquidity, key level liquidity, sweep. Because we made a new lower low. So here we had a market structure shift. Since price was moving on a downtrend, after moving on a downtrend, because price when it is moving on a downtrend, it creates something like this, like that, like this, like that, like this, like yeah, yeah. Like when price is on a downtrend, it keeps on creating what? New lower lows. Because this was our first low, our first high, our second lower low, our third higher low, then a new lower low. Like price will keep on generating new lower lows. But in this level, we had our first low, then our high, then our lower low, signifying that we are still on a downtrend. Then this lower low, it did not form another lower low, but it made a higher high, breaking this initial high. So signifying that we have already changed our market structure shift. Because this, we had a low, a high, a lower low, then a higher low. So if we broke this, if we broke this high, let's say that is what we broke. If you broke this, let's say this was a higher low. If you broke this higher low, it just comes to tell you that we have already had a change in market structure shift. So a breaker block will always be generated from the candle that initiated the sweep of a liquidity at a key level. So this was a breaker, and price will always retrace to the breaker, to this breaker, then from what? After retracing down to this breaker, we will have a huge move from this breaker. Like price will always, it's like it's pairing. It will always repel from this point, forming a new higher high. You see? So price will come back to this breaker. So we've said this breaker coupled with an FVG. So price will create during this market structure shift. We'll have a breaker that will sweep this low, forming a new lower low. And at this breaker, most at times, if not always, most at times, if not always, price will have formed an FVG away from this breaker. And this FVG, that is where you want to take your, this is where you want to take your buys, targeting another previous key level. And our stop loss will be at this new formed lower low, where we will have a swing low, and you want to take your trades up to that level. So what will you be targeting? What you will be targeting, you will say here you are targeting, you are targeting a key level from the higher time frame. You are targeting a key level from the higher time frame. In that's right, because we made a lower, a low, a high, a lower low, a high, tap into the breaker block, then a run on the bull runs. So that is what I would call a bullish breaker. Let me even delete this. So that was a bullish breaker. Now coming to this, now I'll be explaining. Hope I don't take much time while trying to explain this bearish breaker block. So a bearish breaker block will be the opposite of what we have already formed here. So it will be something like this. We will have formed a high. I'm just saying it's the opposite of what we've already formed here. We will have formed a high, then formed a low, then another high. After another high, we form a new lower low, then a tap into the breaker, yeah, something like that, I believe. So this is a high. Let me take this back here. So what do we have here? We have a high. We have a high. What do we have here? Higher, high. And this was a low, high, low, high, low, high. And we've gotten a change in market structure shift. So why will I say that we have changed the market structure shift? Just take for an example what I've explained on the bullish breaker block, that when you're on a you are on a bull run, because a bearish breaker will always be developed from a bull run. So when you're on a bull run, you keep on creating a high, low, higher high, higher low, higher high. You know, I don't know if you guys are getting me, but if you have questions, I'll not explain this much because I've already explained on the on the bullish breaker, and I'll explain it on this video because we will be looking at the bearish one. So on this one, you create a high, then you sweep this high. When we sweep that high, after sweeping that high, we form a new low. We form a new higher high. After sweeping that higher high, so this low becomes a point of interest if you are on a buy on a bearish trend, on a bearish bias. What is a bias? Bias is what tells you that you're already gotten markets will change the momentum to something else. Market shift. So where will our breaker block be? So our breaker block will be from this point, from that point, coupled with an FVG. Remember that. Has price not come back to, has price not retraced to this level? It has. So after retracing to that point, we want to see a tap away. Not even we want to see, because if you want to see, you'll not be in this trade. But if you are confident enough on your model and you've backtested it way many times, you are always aware that price will do the obvious. And if you know or are aware of the bias, because you must first, uh, price must first go together with the bias. Because if it does not go together with the bias, if the bias is fully on a bullish trend, it will not respect this breaker, and you'll find that this created this number 4. It will just be another manipulation, like if your bias is not bearish. Remember that, always remember that. So this is a breaker. Sorry about that. This is a breaker block coupled with an FVG. I told you an FVG is what? This is an imbalance. Remember that I'll not explain that. This is not a beginner's video. So that is it. So that is your stop loss, and probably you're targeting a 1:2, or probably, yeah, maybe something of the sort. So that is all about breaker blocks. I think I've explained that in the best way possible, guys. So if you have any questions, please let me know in the comment section, and I'll be able to guide you on whatever you might need. So away from that, we come back to this currency pair, which is GBP USD. So on this GBP USD, I'm looking at a change in market structure shift. We've already gotten a change in market structure shift. So I want to identify to you guys in this our this is a high. This was a high. What shall I use? Let me first this was a low, 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 a high, a low, then a new higher high. And these are our high high. Higher high. So this was a high, another high high formed, or we can say we can identify these two as our highs. Let me identify this from the Asian range high. This was a high, low, higher high. I think even this was the perfect low. but still after this point we could still have gotten our market structure shift. Remember that. So a high, low, a higher high, then a new lower low. Did I indicate that on this last on that on number 4? So this is, remember, let me compress this. Let me compress this for you guys. So this is number 1, this levels, this is number 1. I'm explaining this video game, this bearish breaker. So low, it is this. You have a low here, or this low, then a new higher high, which is number 3 here, here, new higher high. Then after a new higher high, to create this number 4, which gave us a market structure shift. And this number 4, guys, and this number 4. Sorry about that, guys. Okay, and this number 4, and these are newly formed. So these are newly formed lower low. Newly formed lower low, or our newly formed low. You can just put it like that, because you swept this low, so you formed a new low, meaning we've already changed the market structure. That we had formed a new a high, a low, then a higher high. After a higher high, we created a new low, signifying that we've already changed the market structure shift from this level, that we have already changed the market structure shift. So we changed the market structure shift, and we disrespect bullish PDRS. This one, our bullish fair value gap. We have disrespected it. After disrespecting it, what else have we had? We've had a market structure shift. So a question that you should ask yourself: which were the candles that initiated the sweep of a key level? Were it not this candle which initiated the sweep of these levels? So this looking like bearish, this bearish candle, wasn't it the one that initiated the sweep of this previous week high? It was. So what have we said a breaker block is? A breaker block is the candle that initiates a sweep of a previous high or a previous key level, like this one. And this is the candle that initiated the sweep of this high, creating a new higher high. This is what I'm trying to explain, guys. Wasn't this candle the one that initiated the sweep of this high, forming a new higher high? And did price not come back to this breaker block or this candles area to sweep, to offer smart money, a chance to enter the trade? So price, we get a market structure shift. That was on Tuesday. Then on Wednesday, now this is where I want you guys to see the value of time. You see the value of time. So on Wednesday, we get price offers us get a higher high, a newly formed low, market structure shift, a key level that is our breaker block, and notice how price consolidates around this area. It is offering what entries? It is offering entries to smart money concepts or smart money traders. So at midnight open, we could have gotten, according to the strategy that I trade with, I trade from midnight open during the London session, and it is the perfect time frame to open your trades will be from 2 a.m. So at 2 a.m., did we get another tap into the breaker block? Now here, it proves that we are heading away from the breakup, and price really does trade away like a waterfall. You see how it runs on these lows. So that is what a breakup block is. So identifying your key levels. How will you identify where to take profit at? Short position. How will you identify? So that was our entry, stop loss at that high. Mm, targeting what? Targeting a key level. So which was our key level? We have this swing low. Already I'd marked it out. We had this swing low. Let me mark it out again. At that swing low and this swing low. So we have two key levels. So what first you want to do is you want to take your partials from this level, then leave the rest running. That is the power of paying yourself, like as a trader. Always. And ICT repeats this time and time again. Always make sure to pay yourself. So how will you identify these levels? You can use a Fibonacci tool. Hopefully I'll explain how to use a Fibonacci tool sometime. I won't explain in this video. You'll have to wait on that. Don't have much time right now. For me, I usually target the one. Okay, that was smooth. I usually target the 1:1 1:5 level. This level. That is what I usually target. But if you look closely, the -2 level is very near this swing low. Remember this swing low. Look at the 1.2 level. Look at this swing low. Are they not really close? They aren't really close. They are. So that is about that. That is about how to use a breaker block coupled with an FVG at a key level. And yeah. I hope these guys, I hope this video, you enjoy the video, my friends. And if you have any other question that you would want to ask me, you can go ahead and ask me. I just wanted to show you the value of an A plus setup. An A plus setup, being patient. Now here is where you are tested as a trader. Being patient. Are you able to wait for price to come back up to this level? Are you patient enough to make good money? Are you patient enough to get to make it all, like to come from the trenches, you know? Anyway, I love you guys, and it's been a pleasure to record a video with you guys, and I hope I'll be able to find time to do much of these videos. And yeah, I love you guys. It's been awesome, and see you again. Sorry, before I go, I don't know if I can see, and I'll be able to see another breaker block. Can we see one? Can we see one? Can we see one? Let me see. Let me see. I try to look at one. This was disrespected from yeah, gold must have one. You see? Okay, this is gold, friends. In this breaker block, we've swept. This was a low, a high, a low, then a high, market structure shift, breaker block that initiated the sweep of this previous daily low, breaker block, tapped into the breaker block, ran away. You see? Like this thing forms day in, day out, you know? Like you have to be aware of time, patience. You see what time we got back? Like 7. Time, price, time, you know? Patience. But anyway, guys, I love you, and it's been a moment. So that is all about it, and hope you have a nice one. Bye.